Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Wednesday, September 2nd, and we've got markets off to the races. Another historic day. Markets creating new highs, S&P 500 up huge this week, just to start the trading month of September. If you tuned in yesterday, we went through the top 10 reasons as to why the markets are up. Clients have emailed and called us and asked those questions. So we attempt on a daily update like today to answer those questions. And today specifically, we're going to go through different topics, what markets are paying attention to, what matters most, and ultimately what moves markets and what we're watching at Blanke Schein Wealth Management. So let's get right down to it, and thanks for watching. So if you look at the markets, equity markets specifically, they're up and hitting all-time highs right now. And so the question really becomes, do the markets even care about COVID-19 or this great global pandemic that has basically, ripped through the world as we know it and changed our lives on a go-forward basis, potentially permanently in a lot of different ways, right? There's a lot of economic destruction, right? There's a wake of that that's going to play out in the next few months and years to come. Ultimately, that's really what's going to happen. And there's a major disconnect from the markets, because markets are hitting all-time highs, and to the real economy. That's the biggest challenge. But right now, what the markets are paying attention to are the winners, those companies that can stay open and ultimately thrive by way of using technology and using this adversity to ultimately gain an advantage, grab market share, and get stronger than ever. And that becomes the larger companies. Larger companies are on the exchanges, and that's why those companies and those exchanges ultimately are winning, right? The market's looking through the next 6 months, 9 months. It's long dated, a long dated asset class as related to the equity markets, right? The stock market. So it sees through years down the road, and it's basically saying that those big companies, those mega companies, especially mega tech, are just going to get larger, bigger, and stronger. It's accelerating trends for us using technology, and those companies that are able to adapt in this marketplace as we know it, that has ultimately changed going forward. Now, there's going to be a lot of, as I said, economic disconnect. That's why we need Congress to act to help those unemployed, especially small businesses, to bridge this gap right now, because there are those small businesses that are suffering. And I encourage each of us to support our local small businesses to hopefully they can get through this and survive this great global pandemic. But the markets are separate from the economy. And ultimately, they're seeing through that to shut down an economy again, another Wall Street Journal piece that I talked about yesterday, it just pointed to there's a lot of academic theory right now showing that was not the best approach. The blunt force shutdown is something that the economies can't handle again, central governments can't handle again in terms of the amount of stimulus that they provided. And ultimately that won't be done again, because forget about the United States, the global pandemic is quote unquote global, so therefore markets can see other countries and how they handled the coronavirus differently than the United States. And ultimately now we have enough empirical evidence to show that there's a different game plan going forward, whether it be coronavirus or some other virus going forward, and ultimately adding to that, getting our medical professionals and our medical industry up to speed, because this could have been the great dress rehearsal, if you will. I'm not saying Corona wasn't real or serious or didn't even impact those that we know and love, but I'm saying that the global pandemic 2.0, maybe in the future, hopefully never 100 years from now, hopefully 100 years from now, caught the medical community off guard this time and got all of our hospitals and first responders and everyone around the world to actually think seriously about what if this was the real deal, bigger than and 10 times bigger than this ultimately was this time around. So ultimately the markets are looking through what's happening. The bigger are getting bigger. It's accelerating trends that we're seeing, and especially those that embrace technology. Those companies are thriving. And that's why markets are up ultimately. And that's the biggest sort of narrative right now, where markets are looking past COVID-19. Keep in mind, we had a strong U.S. economy going into this global pandemic. Then we add in $7 trillion plus of assistance in the U.S. economy. Okay, that is huge amount of money. as evidence in our M2 money supply. So we're at 23% surge in our M2 money supply, which essentially just shows that people aren't spending money right now because they're saving, and our savings rate is at the highest it's ever been. So there's money that will work its way into the economy at some point in time once we start, then again, especially in California, reopening. But that's what the market is paying attention to. That's why markets are higher, because the big companies are getting bigger, and those are sort of the publicly traded companies. So that's that on that topic. So our next topic right now is the election 2020. There's so many unanswered questions that we're less than 60 days away. So we're going to help answer some of those questions that are in the forefront of your mind and ultimately everyone's mind, especially the market. And we're going to invite on September 16th, Bob Stein on our Zoom call. He's the First Trust political strategist. He's in Washington. He has some insight for us. I don't want you to miss out. We're going to be discussing everything from what are the topics that are most on top of the mind, important to voters today. Is it law and order, economy, jobs, climate change, trade relations, trade policy, healthcare, coronavirus? That's still out there. Where does it lie as it relates to what the markets are paying attention to? Education, race relations, immigration, all of those topics and more. Hopefully we got time to cover those. But if you have questions at home, please send them in and we'll ask as well as that Zoom call takes place. And finally, let's talk about one little tool that you'll find in the notes comments below this YouTube video. Again, just click down below and we'll have the link for it, or just email Nyan or myself, anyone on the Blanke Schein Wealth Management team. We're happy to help you. We have a when should you claim your Social Security link. Now, keep in mind, it's with Fidelity. Our clients are with Schwab, and Fidelity, they hire us as the financial advisor, as a fiduciary capacity to manage investment portfolios. So we have access to these great resources. In this case, Fidelity has a link for us. 5 questions you answer. You can do it in the ease of your home, and it's super simple. It's age and all the information about your personal that you know, and within 30 seconds or less after you answer the quiz, you're going to get sort of an optionality of if you claim Social Security at 62, 65, 67, or even wait till 70. You see all the financial implications, plus or minus. And so you have to take into a lot of questions like family longevity and a few other things as it relates to that. Once you get that number, if you have any questions for us or like us to plug that into your financial plan, your personalized, customized financial plan, that's what we do for all of our clients at Blanke Schein Wealth Management, we're happy to do that. So use that, go to the notes below, go to the link on when I should claim my Social Security, answer the 5 easy questions, and then let me know your results. We're happy to guide you through. So thanks for watching today. Until next time, like and subscribe and share with friends and family. Take care.